Morning, everyone. Oh, hang on. Gotta get rid of that. Hope you're all well, folks, wherever you are. Morning. Welcome to another Wealth Coffee Chat. A few of the early birds already up and at it. Good to see. David. Brendan. Morning. Kylie's there. Chris, how are you, mate? There's Tim and Luke and Kevin all the way from Florida. Howdy. And Marcus. Marcus is there somewhere. Oh, there you go. Facebook. Morning. You made it in person. Awesome. Good to see. Marcus on the train from Mitcham. All right. Well, thanks for joining, folks. Good to see all of you online this morning. There's Deb as well. All right. We've got a decent crew on the call this morning. Good to see you. Most of you know this, but Jason Witten's my name. If you're new, say hello in the chat. Let us know what you're up to, where you're dialing in from. But welcome along. We do this each day. We try and sort out a little bit of fear from fact. What's going on in the world of property investing, the real estate market? Try and keep ourselves on track. Because you know what? We've chosen to use real estate investing as part of our wealth journey. It won't be the whole piece, but it'll be a good bit. And for some of us, it'll probably be the main piece, right? Main piece. We want to make sure we don't stuff it up. So each morning we try and do a bit of that, sort out some of the facts from the fear and ignorance that unfortunately floats around now and then. So welcome, folks. Good to see you. Good to see you. Good to see you. Well, this morning I thought we might talk a little bit about the supply chain. How broken is it? Supply is broken, and you've heard me talk about it probably ad nauseum, and it's probably worth diving into a little bit. I saw a few articles, so it sort of tweaked my interest again about how are we? What are we doing? What's the big holy grail? What's going to save us? What's going to get us back on track? Well, I don't know. Let's see. Let's dive into that this morning. Morning, Donna. Good to see you. And Bryce. Howdy, mate. So, interesting going around, folks, this supply conversation. Now, the government is the government's lost. The government's lost. They have no idea what they're bloody doing. They got no idea. They don't know their ass from their ear when it comes to this stuff. And sadly, I don't think they're going to get on top of it anytime soon. But they put, some interesting things in their budget. Hopefully we can do this. And, the idea is to do that. That's all wishy-washy terms. Oh, we're going to deliver another 1 million homes. No, you're not. What a bunch of bullshit. Like this, you're not going to do it. And I'll show you guys why. We've never fucking delivered 1 million homes in that period of time ever in our recent history. Anyway, I'm fired up about this stuff. But check this out. I saw this article in the Fin Review. Thought it was worth talking about. What is this question here? What it's saying. What do you guys think? What do you guys think? Not only have we got pretty serious migration and immigration going on in the world of Australian property, so that's certainly putting lots and lots of pressure on the rental world, and ultimately that'll put some pressure on the world of investments as well. But immigration's only one reason. What do you guys think? There might be another reason going on, and it's an interesting one. It's kind of a double layer to this. Chuck it in the chat if you think you might know. There's Chris. Hey, Chris, how are you, mate? Good to see you. Morning, Alison. All right, put it in the chat. Other than the supply issue and the population increase, there's a few other things. There's one other thing going on right now that's quite interesting. That might, be part of this challenge, problem, issue as we're going along. Donna's got a question here. Interesting question. Donna, does anyone know how much cash immigrants are allowed to bring into the country? Well, it's an interesting one. I don't know the exact number, Donna, but I do know there is things like, a visa where if you buy a business, you bring in $2 million. It's pretty interesting how people can get in here. Yeah, intergenerational wealth for sure. Chris, we talked about that yesterday. Not enough council allowing land zoning. That is one thing that's actually needs to be fixed up. For sure, Tim, for sure. That certainly will. And again, there's, when we talk about a few of these things, it's not just one thing. Oh, let's build some more properties, folks. Because you can see the complexity of, trying to get this thing up to speed, right? It's not going to happen. So, what's happening right now, there's a conversation in here that the average household size, folks, the average household size, and if you look from the past, the number of people per household, folks, fell to sort of around 2010, right? And it sort of stayed steady-ish for a while. And at this point in time, the one-person household, and this might change again when it comes to, the cost of rent and the cost of money. But right now, we have, one of those times where the number of one-person households is pretty significant in our marketplace, folks. And we saw the line here sort of trending upwards, and then, along came COVID. So people sort of move back in together and things like that. So interesting. Not only do we have a construction issue, we've got a population increase. All right, a population increase, folks. The number of people living per property, per house, is shrinking. And if you look over here, that was a trend pretty significantly over time. It's going to continue. It's going to continue in that way as we go along. And what else is sort of driving that? Well, you have a look at certain cities, places like Hobart, Canberra, Darwin, Sydney, Melbourne, Brisbane. Adelaide's kind of staying the same. Adelaide's probably the only one that hasn't. I am putting a lot of orange there. It's not a really good color. But, Adelaide's kind of the only one that stayed a bit flat when it comes to one-person households. So we've got this issue, folks. We've got an issue. We've got a challenge. And young parents living with young adults still living with their parents, that's going down, thankfully, for the parents as well. So interesting. What's that doing for all of us? We can see into the future there is a shortfall, and depending on which statistics you look at, depending on who you listen to, depending on what you're reading, it's everyone agrees. The numbers vary depending on which way you look at it. Everybody agrees, no matter who they are, that the supply chain is broken and it will take a long time. We talked about that yesterday, 5 to 10 years to repair that issue. Now, there's another thing right now, and I'm going to talk about this in a minute. There's something going on behind the scenes that the government believes that, we'll fix all of these issues, all right? If we have a bit of a look at this, folks, this is the supply to the end of 2022. Now, if you have a look at the things under construction, and then you look at the next bit, right? So these ones, the ones that are marketed, the ones that are, to be sold, or these under construction. So the ones that landed in 2022, and this is kind of, apartments are the only place you can, medium density, let's call it medium to high density dwellings, is the only place you can really supply a growing city, folks, right? Now, some of us old people don't want to live in apartments, but the majority of young people are absolutely happy. I've got some young investors, sub 40, folks. They don't understand why you would buy a house 35 kilometers from the CBD, right? I've got investors, young investors, youngish, is sub 40 young? There you go. They live in Sydney, and they've invested around the country, done very well. And they looked at me like I had a second head when I'm saying, yeah, buy a house for some land content, 30 to 40K from the CBD. And they're like, who lives there? Who lives there? Why would I hate that idea? Anyway, I'm getting distracted here for a second. So, folks, look at this. Tell me in the chat, 40's the new 20. You're dead right, Alison, especially if you live at home until you're 30. The average age of a first home buyer these days is like 38, folks. Holy shit, 38. Anyway, there you go. You might be right, Alison. 20's the new 40. 40's the new 20. So anyway, Jason, get your question out. Folks, see these properties here that were under construction in 2022. When were they started? Now, some were completed and some were under construction, right? When do those properties get started? Tell me, how many years ago? How many years ago, folks? They were completed or under construction in 2022. 2022. How many? How many, folks? Yep, dead right. 2 to 3 years ago, folks, those properties were started. And have a look at the ones here. This is our problem. The ones that are in marketing, right? The ones that need to get sold. Yeah, you're probably dead right, Chris. The planning started, 3 to 5 years ago. 3 to 5 years ago, the planning started. So here's the drill. See these ones here in marketing and, plans approved and plans submitted. These properties will be at least 3 to 5, if not 5 to 7 years away. And these properties in the plans approved stage, 30 to 50% of the properties are being shelved because the pricing and the sales and the finance have absolutely poleaxed the future supply chain. A lot of colors on it, big crosses, nice and red. You get the point, right? Here's the government solution, folks. Here's the government solution. Let's do this. Let's give international companies tax breaks that you and I as investors, local investors, don't get. It's an absolute bullshit as well. What an absolute kick in the teeth from the government. You know what? We're going to jam you as a property investor because for years you've been helping us supply the market because we're useless at it. And now, because we fucked it up, right, we're going to give these big companies tax breaks that you won't get as a property investor, but we're gonna put our hands in your pocket and we're gonna give the money to international companies. What a joke. What a joke. And here's their joke, right? We'll give tax breaks to international companies and some Australian companies, by the way, but it's still offensive, to go and build to rent houses, right? Housing. So tell me, folks, this is a rhetorical question anyway. How is it giving a company some tax breaks to build some rental properties going to fix the market? It's not. It's not going to fix the market. How does that bring more properties for owner-occupiers to market? It's only going to make the ownership market worse. Is that how you spell worse? I think it is. Anyway, it's going to make it worse. It's going to make it worse. What has happened right now, I know a number of developers and builders that we've worked with in the past who couldn't make their properties work for you and me as regular buyers or owner-occupiers or investors. They've sold it to a build-to-rent property developer who's got cheap money, discount interest rates, and tax deductions galore compared to what we would get. And now that those properties now are locked away, they are being taken out of the market for 20 years. 20 years, folks. That supply is not coming to market, not coming to Australian owners, right? But here's the drill, right? How are they going to build it? You know, how are they going to build it? We've had more builders go broke than we've ever had before, right? 28,000 new homes delayed, supply chain, construction issues going on, builders going bust. We've had over 2,000 builders in the country go broke. 20 of those builders are some of the biggest builders we've ever had in Australia's history, like building 28,000 homes. Porter Davis, folks, I think it was 100,000 homes or something like that. Listen, and it won't come to market exactly. And build to rent doesn't fix the supply chain. All it does is cater to a small portion of the rental market. That's not fixing supply, folks. Matter of fact, it's taking what I would call true supply out of the market because you and I, owner-occupiers, aren't going to have access to those properties. Like they're not. You can't go and live there as an owner-occupier. You can't get on the property ladder. You can't get your slice of, ownership. Anyway, I'm pretty pissed about that. Right, so here you go. What else is going on? We are at decade lows of existing properties. Alison was talking about it before, try and keep the capital moving, right? Why won't people sell? So the listings, the average listings are down on decade lows and probably beyond, right? So nobody's reselling their properties to list because there's nowhere to move to. There's no quality properties to move to. Tell me in the chat, all right? So we talked about the intergenerational wealth stuff, right? Where's somebody put that in there before? I think it was Tim or one of the crew, right? Intergenerational wealth, right? Chris put it in there. Intergenerational wealth. All right. Right sizing and downsizing. Tell me in the chat. You're a baby boomer or a retiree or whatever. You're going to downsize. You're going to right size. That's the new word for it. You're going to downsize or right size. Downsize or right size. All right. What type of dwelling, folks? What type of dwelling usually do the downsizers or the right sizes like? What type of property? And I see this all the time. What type of property do they like? Well, I can tell you they love good quality apartments, units, and sometimes townhouses, right? Because they want to simplify their life, right? They want less maintenance. Exactly. You can lock it up, you can leave, etc. So tell me, when you sell all of these brilliant locations to a build-to-rent company that takes those locations and that supply out of the market, these people aren't going to downsize or right size, are they? the turnover is going to be less. It's going to get worse, okay? It's going to get worse. Population's going up. You guys know this. Now, it's not linear, that's for sure. But imagine that, folks. Imagine we're going to go from, at the moment, we're at sort of 26 million people, right? And let's say go by 2030, right? 2030, the projection is 30 to 31 million people in Australia. Australia. In Australia, right? So where are we now, right? And we need more people in the country for jobs and other bits and pieces, right? That's pretty obvious. So the population's absolutely going gangbusters. The number of dwellings completions, are down compared to the population, which has gone up. What's going on? What are we doing? Like, this is the trend happening for us, folks. And, how long is that going to be hanging around? Well, it's going to be hanging around for a long time, because look at this. Look, check this out. All right. Let's have a look at a low point here in September after the GFC. GFC kind of poleaxed everyone sort of late 2009. All right. We had a bit of a slowdown over that period of time because these things had to come out of the wash. So we had a low here in both housing and apartments in sort of 2011, 2012. And let's have a look at our high of production, which was ruined, by the way. The high of production was ruined by, APRA and politics again, right? So it took from 2011 to 2017, 11, 12, 13, 14, 15, 16, 17. 6 to 7 years. 6 to 7 years for our supply chain in the past of recent times, okay? Of recent times to go from a low to a high. And we need the highest. We need the highest right here. If we could produce at the highest we've ever produced before, which is not going to happen, folks, we wouldn't even catch up to the shortfall that we have right now. Right. There you go. Anyway, so how broken is our supply chain? Well, it's totally broken. And see these here? See those houses there? See those houses? Delayed. So this is going like that. And if you average those 4 years out, well, it'll go like this. That peak, right, has going to be disappeared. It's called mean reversion, okay, because you've got a valley on the other side of that because builders, house delivery, et cetera, has gone down, right? So we've got a problem. We've got a challenge. What's going to happen? How broken is our supply chain, right? 6 to 7 years, if we're lucky, to get it back on track. Okay, there you go. 5 to 10. They're not going to build a million homes. It's not going to happen. They absolutely got their heads right up their crackers, right? It's not going to happen. It's unlikely. It's not going to, and it doesn't matter who you talk to. Even the government boffins say that we're going to be in 5 years. It's at least 100,000 properties short in 5 years at the rate we're at now. So how many properties can we deliver in a year? 30 to 50,000 dwellings. So in 5 years' time, how many more people, folks? Remember the little population projection? How many more million people are we going to have? Even in 5 years, we're going to be 100,000 properties short. 100,000 properties short. And we've got some, interest rate issues right now, construction supply issues. How broken is the supply chain? I think it's stuffed. It's broken from a supply demand point of view. What does that mean to us, folks, as property investors? If you're on one side of the ledger, which is the demand side or the ownership side, you're in a better position than being on the other side, which is not owning, right? Interest rates have gone up. It's pushed the ability for people to own further away because, now their buying power's gone down, et cetera, et cetera, et cetera. Anyway, there you go. What's the takeaway from today? The takeaway is that the supply chain, yeah, exactly, Tim. Try and find registered land to build on. Almost impossible. Takeaway is, folks, if you are a property investor and you've been sitting on the fence because of interest rates, do not. It's actually a lull in purchasing right now, especially for, second and third purchases for your investment portfolio. If you can do it, you should, because matter of time, 12, 18 months, 24 months, whatever it is, interest rates will settle down, inflation will settle down, whatever. Those are the two things on the edge out there that are holding back the market right now. And it's not even holding it back. Some of it's even already going. So, there you go. Anyway, that's it from me. Done and dusted. Wealth Coffee Chat over and out, folks. Thanks for hanging around today. Even though it's bleak from a supply point of view, that actually plays into our favor as property investors and owners. So there you go. All right, folks, take care. Wealth Coffee Chat done and dusted. You guys be good. Have a good weekend. Join me next week for another Wealth Coffee Chat. Monday, we'll kick off again. Look forward to seeing you guys. And remember, a couple of sayings around here. This thing's a marathon, not a sprint. It's going to take for you and I to build our portfolios. Buy something. Well, don't sell. I don't like the idea of giving money to the government when they don't deserve it. So there you go. All right, folks. You guys take care. Be good. Have a great weekend. Bye for now.